Well, good afternoon and welcome. Welcome to another of our webinar Wednesdays, or as we like to call them, Wednesday webinars sometimes, but it's Wednesday and we have a webinar for you today, our number 12 in a series of managing your business in the pandemic. We've been here since March 18th talking about the Economic Injury Disaster Loan Program the day before the state order, and been back every Wednesday since, and continue to plan to be back the next few weeks. So good afternoon, my name is Kelly Bearden and I'm the director of the CSU Bakersfield SBDC. And a little bit about the SBDC program before we get going is it's a program in all 50 states. We're part of the Central California region, and that serves 14 counties in Central California. Our center covers Kern, and Mono. I like to think of it as the boot without the heel, but we also have an additional 5 centers throughout the region that are located in San Luis Obispo, in Salinas, in Modesto, Merced, and in Clovis. So if you need consulting, you need training, you need any other services, they're available and open for business, so contact your local SBDCs. So training and consulting is what we do, and we're on today to another of the webinars on the particular disaster we're going through at this time. We got a good program for you today. We're going to be talking, we're going to break it into 2 halves, more or less, and have a little bit about the Kern Recovers program and a little bit about the update on your PPP and EIDL questions and the forgiveness issue toward the backside. So you see our various sponsors that make this program available to you today. So thank you for that. And let's kind of move on and do something as far as a poll today. Let's see what we got as far as poll. And the first question we're going to ask today is, did you receive a PPP? And if yes, what size was it? So we're going to launch that poll right now and try to see. We have 4 or 5 different options for you. We have 20,000 and under, 20,000 to 50,000, 50,000 to 150. Yes, your PPP is over 150, and no, you did not receive a PPP. So we'll give you a few moments to vote and jump in, and let's see where you come in at and kind of gauge who's in our audience today. And we're up to about 15% that vote. Get it up a little bit and get a nice sample of today's attendees. And right now, we've got a lot of big PPP people out there today. So, which is, always a good thing. So give you another couple of seconds, to jump in. We're up to about 63% of you that have voted. And what we'll do is we'll end the poll and you'll see our second question. So before we end the poll, you see the second question. My biggest concern on PPP today is spending the funds to save my business, calculating and receiving the loan forgiveness, and determining when is best to hire my people back. And the last one is getting a PPP or a Kern recovery loan. So got a lot of loan forgiveness there, and it has been an issue for several weeks. So let's end the polls, as I like to say, 2-part today, and share the results with you. And there you go. The first part of the question was, did you receive a PPP? And the size, almost 30% of you are over the 150,000 for PPP. And then the next biggest size is for those of you that are 50 to 150, 23%. And the remaining 34% of you were 50,000 and under. Okay, so good to know. And the next question was to get your biggest concern, and your biggest concern overwhelmingly has been calculating and receiving loan forgiveness. And we'll go over that at the last half of our program today and discuss a lot of the changes that have happened and a lot of the things that we see happening this week, to where next week it's going to really be meaningful for loan forgiveness once we potentially have some other changes. So thank you for jumping in and thank you for voting. I'm going to stop the share there and move on to the next part of our presentation. So what's new? What's new today? And what you'll see what's new is we're going to get a good update on the Kern Recovers program. And Kern Recovers is a program here in Kern County that is offering small business loans similar to the PPP, and we'll bring on our special guest speaker in just a moment and talk more about that. We'll talk on managing your PPP and the forgiveness form. We'll get into that. Maybe not as much as we have in the past few weeks, but we will be getting into that again. And we'll give a quick EIDL PPP update since the PPP is still open and EIDL people seem to have a lot of questions on that. And also more or less your questions. And so if you will today, I'm going to introduce our guest speaker right now and bring on James Zervis. And James, or Jim, is the Chief Operating Officer for the County of Kern. He has a lot of experience in the financial sector, having both an MBA and actually having also a CPA designation. He has been with the County of Kern since earlier this year. His bosses at the Board of Supervisors are really, really pleased with his work, I found out when I attended the online meeting a few weeks ago. And as they forecast great things and a great addition to the CAO office. So, Jim, welcome. Exciting program. Happy to be part of it. Welcome, and on you go.
Thanks, Kelly. I appreciate it. And thank you for the kind introduction. I appreciate that as well. So, you know, I started with the county actually. My first day here was the day the county declared a fiscal emergency related to COVID-19. So a lot of my work here has been related to the county's response in dealing with COVID-19 and then dealing with the subsequent CARES Act funding through the coronavirus relief funds that the county received as well. So my role here at the county is Chief Operations Officer. Although my background is financial, primarily, I'm actually busy in a lot of different areas in the county. But rolling out the county's plan to utilize the $157 million of coronavirus relief funds and doing that in a systematic and a smart way has been a big part of what I've been doing over the past month. Part of that program, we took to the Board of Supervisors a plan, an initial utilization plan for those funds. It included a $25 million allocation for small business support and finding a way to try to support our local economy during this difficult time of COVID-19. At the time, the first round of PPP funding was out, and it was disappearing very quickly. The second round of PPP funding hadn't yet been announced, so we saw a big need out there in those unfunded applications where the county could come in and try to support those businesses that were still in need of help. And that was really the intent of what we now call Kern Recovers, or the Kern Small Business Relief Program. And so we quickly put a program together and launched it. We've partnered with 4 local lending institutions in order to bring this program to its fruition. And I'm going to spend a little time talking about the background for that program or what it entails. And then I'm happy to answer questions that may come up through the webinar. So I'm going to go ahead and share a screen here. Give me just a moment. Okay, so the Kern Recovers, as I mentioned, it's the Kern Small Business Relief Program. This is funded with the county's allocation of coronavirus relief funds. It is intended to, or it's structured to provide forgivable loans in amount up to 4 times monthly payroll or $75,000. So we capped our program at a lower amount than the federal program simply because we have fewer funds available to us to allocate. But we increased the payroll multiplier to 4 times. So it is still a payroll-centric program, meaning if you're a business that doesn't have any payroll, we may have an avenue to benefit you, but but we may not. So we'll look at kind of what I mean by that in a moment. So it loans up to $75,000. It is fully forgivable, assuming that it is spent in the timeline and for the purposes of the program, which we've tried to make very lenient. Is really our goal to forgive all of this money, but it has to be done in a way that is accountable and transparent, and we can ensure that the funds are used appropriately according to the intent from the county and the federal government. But we really do want to create as easy as a pathway to forgiveness and verification of those uses as possible. So the uses for this loan, 34% or roughly 1/3 will go to cover future payroll costs and payroll related costs. This includes payroll taxes. So payroll taxes, health insurance, retirement, any payroll related costs, it would fund that at least 34%. You can use more than that, but at a minimum it's 34%. 1/3 then, or 33%, going to rent, mortgage, interest, and utilities, some of those overhead needs for the business. And then a final 33% or a third being available for just general working capital within the business. So that's intended to provide flexibility. Businesses can use it for supplies, materials, services, whatever is needed in order for you to conduct your business. We wanted to make sure that there was a good amount of this program that was available with that flexibility in mind. It is similar to the PPP, as you can tell. It is payroll based, but there's some stark differences. So here's a few of the differences. We're using a higher payroll multiplier in order to determine the eligible loan amount. So 4 months in our program versus 2.5 months in the federal PPP program. We're providing a longer period of time to use the funds. So we're saying, look, it's instead of 8 weeks, according to the original PPP guidelines, we're offering 16 weeks or until December 30th to use these funds, whichever is sooner. It's more flexible, as I mentioned. Our categories are more flexible. The federal money had to be used 75% for payroll usage. Ours obviously is a third, like we discussed, and it provides some increased flexibility there. A couple notable differences also is the sole proprietor category in our program is allowed to be calculated based on 2019 net Schedule C profit. So what that means is if you are a sole proprietor and you're not receiving a W-2 payroll check through your organization, you're just taking draws from your business. You can use your 2019 tax return, that Schedule C that looks at the profit or loss from your business activity, and you can actually use that to determine or support an effective payroll number for the owner of the business. So if you're a sole proprietor and maybe you got funding for your employees that are W-2 employees, but you weren't able to get any funding for yourself, or maybe you're a sole proprietor that wasn't eligible for PPP at all because you didn't have W-2 employees, this might be an avenue that can open this program up to your specific situation. So that's something to take note. One of the other big differences here, and it's not on this slide, is that the federal program, the federal PPP program, requires that participants rehire or attempt to rehire all of their employees and maintain their prior wages. And they give you a fairly short time to do that. I know there's changes being talked about with that program, but that's been the case. In the county's program, that's not a requirement. And that's intentional. The county, we recognize that businesses are going to need to scale their operations in order to meet the demand as it's flexible during this time. Businesses are not allowed to reopen or having to reopen in phases, and maybe demand hasn't gotten back to where it was before. So the expectation of bringing all your employees back and not having the business for them to do didn't seem like the best course of action to us. So that requirement just doesn't exist in our program. We actually want to provide a longer period of time, more flexibility in how it can be spent, and not require that all the employees are brought back, so that businesses, as they go through this period of reopening, can utilize these funds in order to ramp their businesses back up to a sustainable level of activity. That's the intent, at least. So those are some of the main differences between the county program and the PPP program. Eligible applicants, pretty similar to what we see in the federal program, although we do use a couple different criteria. We are normal business, any type of for-profit business is eligible, as well as a few nonprofit categories, 501c3s and C6s, and C19s, which are veterans organizations, are all eligible. Small businesses, so this is one of the differences. The SBA defines small businesses much more broadly depending on industry classification. For our program, we are really trying to target local small businesses that need this support. So we have defined that in the county as businesses with 50 or fewer employees and $5 million or less in annual revenues. So that's how we're defining small business for this program. And that's 50 concurrent employees. So if we're not looking at the total employees, if there's turnover and such, just does the employer have more than 50 employees on average at any one time? If so, they wouldn't be eligible. 50 is the cutoff and $5 million. And we're also looking to benefit local businesses. So that means businesses that have a physical location in Kern County, that have one or two employees within the county, and if they have no employees, that the owners are located in Kern County. They have local business licensing if required, and they generate local sales tax if that's a component of their business. If it's not, then it's not applicable. So local small businesses are really the primary targets of this program. Currently, we're accepting applications from a subset of that group. So we are looking first to process applications for people that did not receive federal PPP funding. So I saw the poll results there a few minutes ago. A lot of the people on this call obviously received PPP funding. To those folks, I would say hold tight, monitor our website, which I'll show you in a few minutes. When this program opens up to accepting applications from non-PPP recipients, rather from PPP recipients, it will be listed on the website, and you'd be welcome to apply. So it's not an ineligibility issue, but it is a prioritization issue. We are first seeking to bring relief to those businesses that were left out of the federal PPP funding, and specifically those businesses that are non-essential, or were deemed non-essential by the state, meaning that they had to close. So those businesses that actually had to close their doors and shut down, unable to operate, those applications are being prioritized at this time, as well as businesses in some specific industries that were technically essential, but very limited in the scope that they could actually do business. Restaurants are a primary example of that. Being restricted to only takeout is a huge restriction in the type of business they're able to provide. Dentists or optometrists were only able to provide emergency services, not normal services. So that's a pretty significant change. Tourism and hotel sectors as well. So non-essential businesses, any retail services, recreation, nails, spas, barbers, all the people that were closed, that were ordered to close their businesses, they are being prioritized at this time, or those sectors that were specifically restricted by the governor in the type of business that they can be conducting. So those are the applications that are being processed currently. We are rolling this program out. We started actually a week ago from Monday, and applications are being processed through a partnership with 4 different financial institutions. They are Mission Bank, Valley Republic Bank, Valley Strong Credit Union, and Alta One Federal Credit Union. All 4 of these institutions have partnered with the county. They are the institutions that are accepting applications. So you do not apply for this program through the county. You actually apply through one of those 4 financial institutions. They themselves are local businesses. Every one of those are locally owned locally headquartered financial institutions. They will not require membership nor prior banking relationships for this program. If you want to apply for this program, you can pick any one of those four, regardless of where you do your banking, regardless of your membership status with the credit unions in particular. And I'm going to bring up this website. We have a program-specific website. You can go to it if you go to kerncounty.com. There is a green button on the left that says Kern Recovers. This is a link to it. I'm going to go ahead and bring this up and share that with you as well. Bear with me for 1 second. I don't see. Kelly, can you see that screen? I'm having a little trouble telling on mine.
We can see it, Jim.
Perfect. Thank you.
It looks to be minimized, but we can see it, yes.
Looks to be minimized. Okay, well,
so that should work fine, though.
how's that? Is that any different?
It's good, Jim.
It's good. All right. So this is our website for kernrecovers.com. I want to point out on the left here, these are drop-down menus. If you select any one of those, it will show you an overview of the program that we just discussed. We actually have detailed program guidelines in this section. But keep an eye on two things. Partner financial institutions has specific contact information for the four lending groups that we're working with, or the financial institutions rather. So those are the contacts you'd be looking to make if you were interested in applying for the program. And this frequently asked questions section, we are adding to this as we receive questions from the public or the financial institution. So we hear that people are wondering or need clarification on issues. We're trying to expand this section as those questions come in to provide that guidance. So keep an eye on that. This is the site where we will make it clear on whether or not we're accepting applications for PPP recipients. That is a question right here in the FAQs. And so keep an eye on this as well. And we'll be pushing that out. Any changes in program application acceptance, we will also push out in social media, and we're active in promoting our program through that as well. So that's really an overview of the Kern Recovers program. And Kelly, at this time, I'd be happy to take any questions.
And Jim, we do have a few questions. So let me, first of all, there were a couple comments too, and one of them very favorable toward the higher multiplier, 4 times payroll, which seems to favor smaller employers as well, or those with only a few employees. So kudos for that part of it, along with the comment also was very supportive of the split, the 1/3 split between payroll, rent, utilities, working capital, etc. But now onto the questions, and yep. This one doesn't surprise me at all. Have you determined the forgiveness process? Will it be simpler than the federal?
My goal is yes, to make it simpler than the federal. We're working on that application currently, and we will be seeking to get the minimal amount of information in order to verify that the funds were spent within the timeline and those 3 categories. The process is that there will be a forgiveness application, a standardized forgiveness application form that we're developing now, that the business would submit that application form to the lender that they worked with in getting their loan processed. That gets submitted to the county. We will review it and send a letter notifying you of the forgiveness, I guess the status of the application, if it was approved or if there were issues or other questions. But it's I can't tell you exactly what's going to be required yet. I can't imagine it not being simpler than the federal program and what we're seeing there. We have our criteria for forgiveness is less than what the federal government is requiring in their program. So, you know, our application for forgiveness and that process should be simpler as well. I would stay tuned. In the next week to 2 weeks, we should have that application completed, and we'll put more information on that process on the website.
And Jim, I think you covered enough there, but just to throw it out there, the forgiveness process, one last question was, would there be a salary employee reduction or full-time equivalent such as the federal rules?
I'm sorry, can you say that again?
The federal forgiveness process has employers calculate full-time equivalents to make sure that they retain employees, and also has a salary reduction calculation. Would those be included?
No, those are not components of our program. And I mentioned earlier, the county was intentional here to not make those requirements in order to provide that flexibility to businesses. So that's not questions irrelevant to our forgiveness process.
Okay, a few more questions we have for you, Jim. Are applications being reviewed on a first come, first served basis, or is there some other criteria being used?
So the only criteria right now, well, let me say yes, on a first come, first served basis. The criteria, the two criteria that are playing a primary role right now is, did you receive federal PPP money? And are you an essential business or not? If you were an essential business and you were open for business, or I should say, if you were an essential business and allowed to be open for business, or if you receive federal PPP funding, your applications will not be prioritized right now. So they won't be processed as we give time to process applications for people that didn't receive PPP money and were non-essential businesses. So that's the only thing that is impacting which applications are being processed outside of a first come, first served basis.
Jim, here's a question. After a week now, how many applications have been reviewed by the 4 financial institutions or approved?
So it's hard for me to say how many have been reviewed. There's various, each financial institution has their own process to receive and review those applications. They're all using a standardized application form and requesting the same information, but they have their own internal process to conduct their review. Depending on their workflow and staffing, you know, I just can't tell you exactly how many. I can tell you from the county's standpoint, we've approved now about 15 applications through this program. That is just the beginning. In order for them to get to the county for final approval, those applications have to be complete with a recommendation being made from the financial institution. And so there are various documents in supporting that application that have to be submitted first. So if there may be a lot of applications that are in process awaiting that additional support in order to come to us. I can tell you, I am aware of the lenders currently dealing with between, let's say, 200 to 300 applications a piece that are in some state of review and coming to us. Now, some of those may have received PPP. In fact, I know a lot of them did and won't be prioritized. So I don't want to discourage anyone from applying. If you were a non-PPP recipient and you were a non-essential business, I would strongly encourage you to submit your application soon, as those are being prioritized. So to answer the question, you know, I don't have an exact number, but my guess is between 200, 200 to 300 in process by each of the financial institutions.
Great. Absolutely. The next question has to do with, I have a PPP. If I am fortunate enough to also receive one of these loans, can I use the payroll concurrently to when my funds run out on a PPP?
So you can't double dip. And let me be clear. So you can't use the same expenditure to justify both the PPP loan and the county loan. In fact, there's a certification that you attest to on your application that says just that you understand that you can't, if you do receive PPP funding or you agree not to seek PPP funding or any other funding that would pay for the same expense. I would say you could use them, you could coordinate them. You could first use maybe the PPP loan to pay for expenses and then move into the county loan to pay for payroll expenses. As long as that same expenditure is not paid for twice, it doesn't get counted twice, then that would be acceptable.
Jim, is the owner's credit score, or are there other underwriting standards used by the banks?
So we do not pull credit. We're not pulling a credit score. That's not part of our background or our process. There are some standard organizational documents that you'll need to supply. So the lending institutions in the county need to know that you are a real entity and who is behind that entity. So you will have to provide things like articles of incorporation, fictitious business name statements, official documents to show that you are a legitimate organization. You'll have to provide tax returns and other internal documents in order to support the calculations in your application. So there are additional documents that will be requested by the financial institutions when you file your application. But there aren't any credit guidelines or bankruptcy issues, or we don't look at your loan to value ratios. We're not looking at any other typical ratios or lending factors that would come into play there. We do look to see if you're independently owned and operated. So we are looking to fund Kern County small businesses. So if you're a franchise, if you're a corporate franchise of a bigger entity, then that's going to be an issue, and those are questions that are asked. I'll share with you a couple specific examples. I have a local franchisee that owns independently owns a couple local franchises of one institution, and in total, even adding all three of his locations up, they still qualify as a small business according to our thresholds. Just because he's a franchisee does not disqualify him. It's his investment. It's at risk. He has hiring and firing authority over those employees. It's his business. He just happens to be a franchisee. That's acceptable. Conversely, today I had a situation come up where we have a local business that technically meets our small business criteria, but is 60% owned by a larger industry, a larger entity that is much larger than our small business requirements. Because they're not independently owned, they're controlled by a larger entity, they would not qualify. So hopefully that sheds some light on some of the things that will be looked at just to verify that you meet kind of the intent of the program, local small business.
Last question, Jim, is do you know of any other a similar program to Kern Recovers in any of the surrounding counties in the San Joaquin Valley, Eastern Sierra, or Central Coast?
So I don't. The only one that I'm aware of is Fresno County has launched a $5,000 grant program to local businesses. And if you go to, I think, FresnoCounty.com, I saw it on their website. Again, it's $5,000. It's a grant program, as far different than a forgivable loan program, obviously. And they had $5 million that they were running through that program. So that's similar, but to a lesser extent, and obviously a different program. So as far as what we're doing, I'm not aware of anyone else here in the Valley that's doing this.
Well, Jim, thank you for joining us. Exciting program. We know at the SBDC, a half a dozen clients that weren't able to get in the PPP for various reasons. And I think most of them have already applied. So great program. Looking forward to doing more and learning more about some of the other county resources that are coming up as we move through this crisis.
That's great. Thank you for having me, Kelly. I really appreciate it. And again, I want to encourage anyone that meets those criteria to come to our website, seek out our financial partners, and move quickly, because this program, even with $25 million, will go quickly. So thank you very much, Kelly. Appreciate it.
Thanks, Jim. Okay, great. Well, let's move along now. Get on to the other half of our show today, and that's the actual what's new in the PPP and the EIDL world. And the big news this week was really the House passing the PPP fix. And this is actually, it passed by a vote of 417 to 1. So I believe your complaints were heard loud and clear, not only locally or regionally or in the state, but across the country. So some of the provisions in that are going to give borrowers 24 weeks to use the funds. And I'm going to take the last one first here before I get into the other ones, because I think this is really important. And that is the Senate Leader McConnell supports this program and is going to take it to the Senate this week. And what's important about that is there's not going to be a separate Senate bill that then is going to have to go to conference and take more time and then get resolved sometime in the next week or so, couple weeks. So they're going to take the exact House bill and run it through the Senate, it sounds like, as soon as sometime this week, and then a presidential signature. And then next Wednesday, we will have some really fun stuff to talk about. So one of those fun things will be 24 weeks to use the funds, and also reducing the use from 75% of payroll to 60% for forgiveness. And that's big for a lot of people that have higher rents or have higher utilities and have been having a problem for some reason or another making that 75% figure. It also moves the deadline to rehire employees to December 31st of this year. Please recall before that it was June 30th, and a lot of people were really anxious about trying to get their people back, get their stores opened, and get going in business by 6/30. So now that would move that to 12/31. And the unforgiven portion of the loan, so if you do have parts that are not actually forgiven, that portion would be amortized over 5 years instead of the 2 years as was the original. So those are the highlights of that. And I think that really fixes a lot. But what it will do also is it'll expose other issues that we then have. And actually, you guys do a really good job of doing that with your questions. So we will get into those in a little bit, but your questions will help us see what this fixes and maybe next week what we still have to fix after moving forward, of which there still could be an SBA Treasury type of fix as well. So that's the highlight, and it really changes everything. It changes a lot of the things to what we were wanting to discuss today, and rather than going into some of those things, we'll just kind of cover things kind of routinely, jump into a couple of our other programs and see how that's going to affect some of the maneuvers of your small businesses. So the other issue that came up this week was Congress, or actually SBA and the Treasury Department, did move $6.8 billion of PPP funds to smaller lenders. And the smaller lenders were exclusively the community development financial institutions, or CDFIs, which you'll find in a number of communities throughout the Central California region. And the CDFIs, you know, they typically will work with a lower income community and provide access and provide some of the individuals that are kind of haven't jumped into the PPP fray, so to speak, for whatever reason. Didn't know about it, didn't have taxes completed from last year, et cetera. There could be a number of reasons why that hasn't happened. So that will be some money that hopefully reaches down to the very smaller businesses and gets out in that regard. Just our EIDL PPP discussion is SBA still has over $100 billion and is still receiving applications to the PPP. And the PPP might get a little more popular for those that didn't file or couldn't file. well, if you couldn't file, you're probably still left out, but many people that could file came up and said, I don't feel comfortable with the rules and the regulations. And now that we have clearer guidance on that path to forgiveness, it might be easier for a lot of people to actually now pull the trigger and actually apply for the PPP. And then if you're in Kern County, you might say, well, gee, there's the Kern Recovers program, which is, if it fits my need up to 75,000, is more of an attractive program for me. So possible that we still get that SBA fix and some of the other things coming down. If you want more information, because we've been getting, the latest we've been hearing on EIDL and the economic injury disaster loans, and not the advances, but the actual disaster loans. We're finding that that still the magic date seems to be somewhere around March 30th for a lot of people. The pre-March 30, we're getting a lot of people that have received EIDLs and have received information that they will receive the funding. And one of the more troubling things is that we've heard from a few clients this last week that they're actually receiving a notice that their time limit is about up for accepting their EIDL when they couldn't find that they had received anything from SBA. So I would encourage you to, check your spam filter, your junk filter, or if you do receive one of those notices saying, you have only a certain time limit or your EIDL will be turned back, is to do a couple of things. One would be to contact the SBA, and we've had some fairly good success with the 800 number that's listed right there. Or you could email SBA, or actually tomorrow you could also attend a webinar put on by the Fresno District Office and the SBA Office of Disaster Assistance that will be talking tomorrow about the EIDL and a little bit of PPP and loan forgiveness. And you can go to their sba.gov Fresno location website and find more information to attend that tomorrow. Oftentimes on that, there will be an individual from the Office of Disaster Assistance who can provide you more guidance and assistance, particularly if you have an issue like that. Or if you've filed a considerably long time before perhaps March 30th or even into April and you want to know or learn the status. Please recall on the EIDL that it is taking SBA a considerable amount of time due to the multi-million applications that they've received to get through the pile. And it is taking time, but they are plowing through, and we're hearing from more and more of our clients each week that they are getting EIDL acceptance. One thing we talk about a lot on this webinar the last few weeks or several weeks maybe is the importance to manage the forgiveness form. And we've been talking about actually going through that particular process. And here's what we do know on managing, and one of the things that you should, four of the things you should be looking at. And, there's options for borrowers to use a different number of calculations. So you do have a standard method and an elected method. One of those is determining the payroll period. If it goes to 24 weeks, as it looks like it's going to, the calculated payroll cost and the alternative payroll period that you could take would maybe depend on how much easier it is to calculate. And that was kind of the intent behind this rule change and this final rule forgiveness change. Because there's some people that run into semi-monthly payrolls and even bi-weekly payrolls where your payroll period is 14 or 15 days apart. And you're having to allocate between those particular payroll periods. And for some people with a lot of employees and not a good payroll program for that, to say your period started on the 3rd, whereas your payroll period started on the 1st, what can you claim for forgiveness and what can you not? So that's one of them. There's also options on the full-time equivalent. We discussed this a little bit last week, or we discussed a lot of this last week. But one of the key things to recall is that when you start going into your full-time equivalents and your FTEs, that you do have the flexibility to choose between two options. One of those options is to treat a full-time employee as a 1.0 and any part-timer as a half person or a 0.5. So if you have one of each, you have 1.5 employees. The other is to treat it as a percentage. And let's say you have a number of employees who work 30 hours a week. The other option would probably be your preferred method, because under that option, 30 divided into a 40-hour standard work week would be a 0.75. And the other option gives you a 0.50. So when you try to calculate and get up to your FTEs, that is another thing to take into consideration, the two issues that are available there. You know, last week when we went through, and I will jump in this in just a minute, the self-employment issue of obtaining 75% for forgiveness. Hold on to that one. I'm going to jump into the spreadsheet, the Excel spreadsheet we've gone over, and just kind of show a couple things. Also, there's some other statute and exemptions. And so let me see if I can do a new share here. We will be taking your questions, so do please jump in with questions if you have them. And I'm trying to see just, there we go. It's a little bulky, but you know, it's good now. So here's the spreadsheet, and you know, you've seen it if you've been on the webinars before. It's generally PPP by the actual number of the webinar. So today it's PPP 12. Whereas in the past we've made this available, there's not going to be significant changes until next week when we start doing a few things like this. When we start jumping into this and changing this out to 24 weeks. And the management aspects of this really begin to multiply. You really get to really start to use the money like I believe it was intended, and really start to be able to use the funds and bring back your people to best coincide with your business cycle when your customers are coming back. Before that wasn't the case. Before it was too much about trying to get that money spent before this 8-week period. So this is all going to be updated next week, and we'll jump into that. But there's one thing I really wanted to show you that we covered last week that came up afterwards, and that was for self-employed individuals. And I have a tendency, as I have mentioned a few times on this webinar, to actually use a 60-day calculation at times instead of 56. Okay, so when you use 2 months of your earnings at the beginning to actually calculate what your PPP was, that was a 2-month, 60-day calculation. But then when we get into the forgiveness, it is about 8 weeks, of which is soon to change, hopefully, to 24 weeks. So when we came up with 8 weeks times 7 days, it was 56 days. So last week in our calculation, I had this here, which was basically a 60-day window, which showed an 80% level. It was pointed out to me this last week that actually it would have only brought, and only self-employed individuals could attain a 73.8% level of forgiveness based on the formulas presented. So this is an issue that I just wanted to say that should take care of itself next week, because when we get into next week and we get into the new rule changes, if they occur, which I think most of us think they will, then it's going to change some of these numbers and actually increase, you know, to where it actually will go away. So keep that in mind. A few other things that before we get to your questions, we will be, as I said, we'll be in this big time next week with the full-time equivalent. The one thing that we really wanted to get into, and I have a slide on it that will cover it instead, is this whole thing about salary reduction. So it'll be a lot easier to figure out with the 24 weeks and with the updated information. The 24 weeks changes basically everything. So let me stop this share and go back to this and get ready for your questions. We'll wrap this thing up and get into your questions. So with this, managing the forgiveness form, then we kind of get into this salary reduction wage issue. And they're really on the 3805 form, which is the SBA 11-page PPP loan forgiveness form. Actually, we will get into 4 issues that they raise in that. And that is for the salary wage reduction. And remember, this is about reducing potentially the amount of your forgiveness. So the first one is determining if pay was reduced. So if you reduce the hourly or salary rate for people less than 25%, there could be implications. There is a safe harbor that we went over a little bit last week and will continue to meet. But then we got to look at the salary hourly reduction, if there was a reduction in time on hourly reduction. And that is where really some of it might come up. But again, now with a 24-week window, it changes a lot of that calculation, a lot of that aspect. So the salary wage, and there was one question last week that dealt with overtime, and I have not heard anybody, and I've asked this question a lot this week, I have not heard anybody come back and say that they figured that the overtime premium that is paid for being busy and working your employees over 40 hours a week would be as part of that consideration. So that's what we know today. And we know also a little bit about the safe harbor. We'll get into that more next time. You know, I'm going to throw cash flow in front of you because as important it is, and we'll be back next time with a very detailed, much more greater look and the availability of PPP 13 for you next week if you want it, with hopefully the new 24-week window. Okay, so on with your questions now. Got a couple of them emailed to me, so let me start there. As I now do that and kind of jump in, I'm going to be in the question box. So here we go. The first question is CAM, C-A-M, part of either rent or utilities? And CAM is that portion that many people pay in addition to their rent. I would consider that to be definitely, if it's for at least, you know, usually it's for, you know, maybe if you're in a strip center cleaning your parking lot or a variety of different issues for insurance and others. It's in your lease agreement. And if it's part of your lease agreement, I would consider that to be part of your rent. If I hear anything else, I will let you know. And a few more of your questions here. And I'm going to be jumping into these on the fly. So hopefully I can answer most of them. Can I prorate my payroll expense for PPP? And yes, you can. And actually you need to, unless you can coordinate it with the alternative covered period. If you can coordinate it with at least one of your other periods, then it is more favorable. And it sounds like, Miranda, you have a semi-monthly payroll and your PPP started on April 20th, which was the example in our spreadsheet also. So yes, you would need to prorate it. I think it's probably safer to go do it on an hourly basis. I would love to say, you know, take 10 of the 15 days and multiply it by each employee. But to really be safe, I think you need to go through and see if you have like a variable payroll, an hourly payroll where somebody's off a couple of days and things like that, do the exact hours. Sorry about that, but that would be the safe way to do it from my perspective. Okay, some other questions. Our Schedule C for 19 isn't done. Can we submit a balance sheet? I think this had to do with the Kern Recovery, and Schedule C is needed to be done for the self-employment for both PPP and also for the Kern Recovery. Thanks, Richard. For those of you that might be in Fresno County, the program that Jim referred to in Fresno County is the Fresno Hub Grant, HUB. And you can go to Fresno County website to learn more if you are in Fresno County. Nancy asked, will any of this be available afterwards? A recording of this webinar will be on our CSUB SBDC YouTube channel. I don't anticipate sending out a blast like we do after each of our last webinars, just because we don't have as much to send to you. But if you, or actually even if you email me, I can send you a link. Okay, I have a small PPP for $2,000 and I have an EIDL advance for $4,000. And if they are tied together in PPP forgiveness, is that $6,000 of which 60% has to be payroll, or is only the $2,000 used? And as I understand it right now to be, I still show the EIDL advance of $4,000 as being non-forgivable. So you would be able to get forgiveness on the $2,000 for the PPP, but the $4,000 is most likely going to need to be repaid over hopefully a larger term, which would appear to be 5 years. Recently, I filed an EIDL loan and we received a notice that EIDL was for agricultural loans only. And that is correct. That is correct, that EIDL has been open up for agricultural type businesses and agribusinesses only. We don't know the status. I would recommend maybe going to the SBA webinar tomorrow if you want more information on EIDL and to try to learn a little bit more what's going on there. This is a good question, and this is, Carol, thank you for asking this. Even though the time to use has been extended for 24 weeks, will you still be required to use within an 8-week consecutive period within the 24 weeks? So I understand your question, and since everything is kind of in 8-week terms right now, are you going to have to use a 8-week period within whatever's most favorable for you for the 24 weeks? And that's one of those classic I don't know answers, because all I can tell you right now is that we do expect further guidance from SBA after Congress comes out with these rules, and that is something that we will be leaning on for that information. I don't have any idea if the EIDL is going to open again for non-agricultural businesses. That is a question, so that is an answer. No idea. We hear both ways. Okay, is there somewhere to get and use the spreadsheet? Come back next week. Or if you email me, I'll send you last week's. This week's really wasn't updated much except for what I showed you based on the pending 24 weeks and the different variations that might come from that next week. Did you say that healthcare expenses are part of forgiveness? Healthcare insurance, group healthcare insurance, can be part of the forgiveness process. The actual expenditures themselves are not. Where do we access the forgiveness paperwork? The forgiveness paperwork is on an SBA form. It's form 3805. If you Google SBA form 3805, you should be able to find the nice 11-page document, of which I will remind you that really the first and foremost part of that I would jump into would be the PPP Schedule A worksheet back on about page 8, I believe. What is covered under utilities for the PPP forgiveness? We're really seeing a lot of different variations on that. At first, I thought it was mostly just fixed utilities, your water, your sewer, your gas, your electric, your TV, potentially, if that's used in your business, your internet. We're getting some different areas for fuel, and hopefully we will have an exact rendition of what they will accept and they will not once the SBA comes out with some further guidance. Okay, Anonymous. Anonymous is a sole proprietor, and applied for PUA, which is the self-employed unemployment insurance, the pandemic unemployment insurance, the first time that that's been available ever that I know of, and have started to get payments. Today I got an email that my application for EIDL is ready for review. I'm really uncomfortable about accessing money since I have not been paying into the unemployment fund. Well, I believe that's true. You have not, and it was designed to help. I wouldn't feel too uncomfortable about it. You know, the EIDL is there for, and if it's an EIDL advance, it's there to provide you with working capital and other needs that you have. And the unemployment is to actually fund you. So that's my 2 cents on that. Will we be able to apply for more PPP money if the 8 weeks is extended? Right now, I would say probably not. But again, there's $110 billion that's left. And if that money doesn't go away fairly quickly, which it doesn't look like it's going to, there is going to be plenty of other resources. But what Congress and SBA and Treasury does with that is their call. My guess would be there is not going to be additional PPP money. Okay, one last question, and do we have to hire employees back that are currently being paid benefits, however, we are not paying them due to H-1B or work visas? And, you know, Peggy, let me take that one offline and get back with you on that, because there's a lot to your particular question, and which leaves me time for one more. And okay, will this fix? Limit expenditures for payroll to 60% max. Conversely, can you still allocate 75%? And I believe that's coming from a perspective of a self-employed individual. And being self-employed, I believe that, it's a good question. I believe it's still going to be basically the same calculation that you came up with before. And the 60% is just the threshold that you have to meet for forgiveness. I still think you would probably come in around the 73.8% as earlier done, but let's get some further guidance on that as well. Okay, only 4 minutes over. That's almost a record lately. So thank you all. I'm excited that we have some great information that's coming available. We have some fantastic changes that are imminent, apparently, and we'll have a lot of information next week. So thanks again to Jim Zervis for joining us today and enlightening us on the Kern program, the Kern Recovers. A lot of opportunity there. We'll be back next week with a lot of forgiveness, and Keith Brythus will be back next week. So thanks for joining us. We're out of here, and we'll see you next week. Bye-bye now.